It is Tuesday, March the 31st, 2026, and we've just had a couple of really awesome squeezes on gold and silver. I caught multiple really nice entries. I'm actually completely out now. It's, as you can see, very extended. This is the 1 minute time frame, but if we jump over to the 1 hour, you can see that we've had quite some significant movement within the last few minutes. Already you can see on silver that just structurally wise, it is set up very much for a squeeze. And you can see that simply because you have a lot of smooth highs, you have failures to break through lows. So failures to break structure to the downside, very key characteristic of a squeeze. We've got liquidity gaps between these two swing points. With a clear impulse high, we have resistance up here that traders are going to be going short from. But it really starts out on the daily time frame, so weekly. I'll go to the weekly, and I might actually jump over to. I'll move this to gold because then I can compare the two charts. So they've got silver at the bottom, gold at the top. Obviously, a really large rally would then create very long wicks on either side. When that happens, I see that as traders are going to see that as a bearish rejection, and this is a bullish rejection. So there's going to be a lot of liquidity on either side, which is why when we're in the middle of this range, I see this as very much as a range. I don't really want to be trading too much directionally in it. We eventually get the Iran War thing, and which was beautiful because that was where I was expecting us to be bearish, and everyone was hyper bullish right here. Results in a beautiful sell-off. So if everyone was buying up in this area and the premium of this range, they've got their stops below this low. We don't just take out this swing low, however, we go a entire weekly swing low below that, plus below that as well. And also, if you line up these old relative equal highs, we've got a third retest of that same level. So traders see this as a resistance support level. Silver, kind of a similar situation, although silver initially was looking a bit heavier. Didn't manage to rally as high into the range, but it did reach a premium and then sold off. But if we zoom into gold a little bit here, I don't really want to pull the drawings on, but I can. You can see that we've got the old previous week high marked out, which we basically made a perfect high with, and then we swept below it, closed back above, and now this week so far has traded down, but fallen short of that level. Now this is a key concept I'm going to be noting today a few times, is when price fails to reach a key level, it can be either an institutional level, such as a big figure level, or it can be a obvious support resistance level. But when that fails, that a lot of the time is bullish. Now, where that becomes quite significant is on silver. If we go to the daily time frame, so the same charts daily now, we have, as gold sold off last week, so let me try and get this looking nice. So as gold sells off, on this day right here, on Thursday, the 19th of March, gold has not yet hit that low. Silver also has not hit that low, but it closes with a very long wick from that low. So try to see that as a bullish rejection. And then it rolls over straight below that wick. So we've just rated out that sell side. This was a decoy buffer low. That's the concept name. And then that's the actual sell side it was wanting to target. After we've done that, we climb back up. And this was on the Monday. The Tuesday then trades down into Monday's wick, fails to reach the midpoint, so that's a bullish sign. But more significantly, because this is the decoy buffer low, this is a very obviously is an engineered pull. Like they put this long wick here to create sentiment around, oh, it's a bullish rejection, let me buy and put my stop below it. So it's a intentionally engineered long wick. That becomes a key reference point. Once we've taken that out, we then drop towards that low, but we do not reach it. So if we had swept below this low, that is also bullish. But when you fail to reach key levels like that, that is a signature of strength. So that's what we get on silver. Gold, we don't really have that same thing happening, but we still fail to trade into the midpoint of this wick, which is a bullish sign. We then trade higher, it just runs up into this high, just starts going sideways, leaving a lot of smooth lows, but the key point is that we're failing to trade into this wick. We also failed to reach that. But then there's a third factor as well that really stood out to me on silver, and that is this long wick. So for this long wick, finding the midpoint of that wick, once we have rated below it, retrace back above, and then close back below, this midpoint should keep price below it if we're bearish. But the very next day, on this day here, on Friday, it actually closed the day back above the midpoint of that wick. So come Monday, I was bullish straight away. I wanted to buy. I actually took a loss initially on Monday, trying to go long, because I kind of stupidly thought I could just buy based on the 1 minute time frame at that level, and it ended up working quite a bit below that. But then today you can see that it actually returns pretty much perfectly to that level, which is, yeah, basically perfectly tapped it and then ripped, and that lines up with a very key point in the low time frame. So there are a lot of concepts and characteristics of the squeeze that I keep in mind, and one of those is the failure to break structure. So let's say you're a trader and you are going short, and let's say you want to go short from here. Don't actually need all of these anymore, unfortunately. I had limit buyers in, but it fell just short of my entry, which was actually a confluence in itself. But let's say you're a trader and you're trying to go short, and you're thinking, oh, cool, smooth highs, I'm going to go short, and I'm going to take profits, once it breaks this low. Price never breaks the low, and then it eventually has this squeeze back up. So that is kind of the reasoning as to why I see this as a very key characteristic of a squeeze, but basically failing to break key structural points becomes a candidate for a beautiful squeeze. And that's what we get over here. We take out sell side, but we don't break structure significantly. You'll notice on gold that we did actually fail to reach the midpoint of the range. So we basically perfectly came to it, but didn't quite get below it. So that was the only thing that I was a little less sure about, but we were still showing the characteristics of a squeeze. You can see I've got this previous day low marked out as well. It's going to be a little bit all over the place, this review, but you can see that we actually failed to reach that previous day low on this 4-hour candle and then ripped. And that's significant because this is a previous day low. And then we didn't just take out that, we took out the previous day low from before that, which was all the way down, well, a swing low from before that anyway. So that becomes like a decoy buffer once we've rated below it again, and then we rip from it. Leaving a lot of long wicks on the highs, that's enticing traders to get short again. And then on the low time frames, we've got a very clear market maker buy model in this range as well. So going to the 1 hour time frame, I'll probably just get rid of this for now. 1 hour time frame, the thing that stands out the most is the smooth highs, but also this. So this is what I call a liquidity gap, where you have a obvious swing point and then the next swing point below. And when you have nothing in the middle of there, it's very thin liquidity. So if price is going to go above this high, beyond the midpoint of this range, which it does over here, that suggests that it is very likely to take out this high. And that sets the stage also as a confluent for the squeeze. But yeah, a lot of smooth highs, very obvious buy side pulls, such as this impulse high that once again, we came beyond the midpoint of these two pulls, failed to reach that high, pulls back, reaccumulates, and then hits it right there. And above us, obviously, there are a lot more liquidity gaps. So if we were to aggressively take out this high, then that becomes a very likely candidate, which is what you want for a squeeze, because a squeeze is by definition a very fast run. I'm going to go straight to the 15 and get through this relatively fast, and then I'll show you some of the entries I took and the trades took. So the thing on here is I actually caught this rally here as well yesterday. Unfortunately, it's not all good because on my Top Step funded account, I actually took a max loss on this day and on this day prior to the rally. And then on my personal account, I made it back on the right side of the V essentially. But just trying to force something a bit too early in the day, that really took me out. But you'll see on gold 15-minute time frame, we have Sunday open right here. It has the sell-off. One other thing that stands out is the fact that this is a manipulation closure, which you'll see again on the right side up here, but that essentially indicates potential original consolidation, within sell-off, get the reversal, taking out the most deep discount internal range liquidity without taking out this low. So that is a confluence in of itself. Plus, on top of that, once again, the classic 420s, that always tends to be a place price likes to reverse. Yeah, so 420s right there. That was also a strong confluence. But once we've reversed back up, we had this nice run into the highs. And this area starts getting interesting right here. So I actually have to drop down even further on this time frame to show this area. But what I'm looking at here is from this low up to the high, that is a market maker model. Smart money reversal. We have first stage, second stage, a 3 drive pattern, and then a reversal back up. So I had my limit buy order set below this swing low, and that's because I identified this as a original consolidation. And I wanted to see it go one level of liquidity beyond that, but it didn't want to. And I recognized that as well, and I was like, okay, I'm just going to aggressively get in on the rip. But as you can see, the rip was quite aggressive, so I just kind of didn't manage to add. But I did get my fill on silver, and silver I added right here. So if I jump over to this chart, let's see. So I'll open up silver. You can see I tried to get back in on the rally. I was waiting for a pullback, but I did execute this trade. And if I put on execution marks, so initially I actually took a short here. Decided just to close it out. Wasn't what I was looking for. Then got in here right at the daily wick CE, but more importantly than that, if I zoom into this 5 minutes chart, it's getting a bit laggy, but there we go, just opened it up properly. So on this chart, you can see that we have a very obvious impulse low that lines up beautifully with that daily wick midpoint. And I just had a relatively wide stop. I had my stop loss down at down here, so giving it permission to come down into this area as well if it needed to, seeing as this was a 4-hour low. But I expected it likely to react right from here. And that's also to do with this being a old trailed low. So this concept is when you have a large rally, we then engineer a really obvious low and then start running higher. So traders who are looking to buy the dip for the continuation or trail their stops, that becomes a key reference point. So once we drop below it and then rally back above, that shows that we've likely accumulated that sell side. Referring back to the same point, that lines up nicely with this low as well. So I had my limit buy right there. You can see, where did I put it? Hold up. Here we go. So getting in right at that low, beautiful fill actually. And I had very, very high conviction on this play. But as you can see, I held up to these areas because we were very extended and for my account size was up a decent amount percentage wise. And I would have loved to have added. I was considering adding right at this point here. So you can see how we have a swing point kind of and another swing point up here, midpoint of that, get a closure above, and I was looking to add in this area, but it just kept on running. We then have gold as well, which I'll might as well walk through gold, what I was seeing there. But once again, gold, if we go to the 5 minute time frame, you can see where I wanted to get in. So I had my limit order sitting just at this low, so basically right there. And price didn't quite reach that in rallies. Now that why that was so significant and actually gave me more confidence on the trade, we zoom out, we have this old high. So that is a pretty obvious buy side pull. We then have another high below it, another obvious high, and a perfect retest of that level. If we drag out this low, in fact, if we drag this down a bit because that's a more recent high, we have multiple highs at the same area. We then have this consolidation at the exact same area, creating a kind of a resistance idea at that high. And then we get this breakout. What's significant about this breakout is that when we pulled back, we failed to reach that same level and then continued to rally high. So that suggests that they're not planning to come back to that area. That's one of the signatures of strength, is a failure to retest a key level. We then pull down, midnight begins to consolidate down here. We're also consolidating below what could be seen as a bit of a trend line somehow. I'm not a trend line person, but let's say you did that. People see that as resistance, and then it rallies. But if you look at the opening prices, this yellow line represents midnight, that is 1 a.m., equal opening prices. That's a signature of a original consolidation. So once we get that, we've got the original consolidation, and then we have first and second stage, and then we have the smart money reversal, and then a pullback. This becomes the intermediate term high for first stage. We break the low, comes back into the range, and then second stage. Bit of a gyration here, but then eventually getting that third drive into the lows. And the smart money reversal of this market maker model is aligning with the rate of this pull. It's aligning with silver hitting that key point of interest. And the very fact that it fails to get down to this old low and get such a clean reaction back out was a very strong confidence as well for the long. If I go to the 15 minutes, there's one last thing on that time frame that is a incredibly strong confluence, and this goes back to the manipulation closure I mentioned on silver as well, where we have a long wick, the midpoint of that wick, we get a closure above it, leave relative equal highs, and then aggressively sell off. So that's also showing original consolidation as well. So very, very obvious original consolidation, a pretty obvious intermediate term high, breaks the low, becomes first stage, and then you're looking for second stage and a reversal back up. I'll show some of the, there you go, there's my executions. So a lot of executions. I took a few too many trades the other day, like you'll see back here. So a lot of good trades on the way up on this account. So getting long, caught a really nice run up. But then if you look at my other accounts, I was actually also trying to go long a little bit on the left side of the curve, and I actually gave back quite a bit. Then we also have, if I jump across here, I can bring up this. So this is a challenge account, not a challenge account. This is a competition account for Black Bull, which I've been very, very aggressive on. As you can see, I've currently got 9 lots open on silver still. But if you look at the account history, I've been putting on like quite large lot sizes. Something because it's just a competition account and I just want to see how large I can get it. So currently at 680k. And I think the people in the top 10, they're all like in the well, I think the person coming first is like about 10 million or so, and we don't have much longer left. So if I want to get into the top 10, I need to be quite aggressive. But I also managed to pass a 25k challenge with GFT as well, just first stage. That was on this trade here. Really nice trade. There's a really cool trade in here actually. I'll get rid of all these arrows, but this was a beautiful trade where we have a pattern that I've been noticing a little bit recently is when we've got a 3-drive pattern that I'm expecting to fail. So 1, 2, 3 drives into the high, draw out that third drive. I want to see that fail and then act as support, or at least send price high. What happens is we make 3 drives, we then trade up into it, and then initially it makes a failure swing and rejects lower. Then after rejecting lower, it can take out the low or it cannot, but then when it starts cooling back up and I'm expecting it to fail, that becomes a potential squeeze condition. We have a long wick plus displacement, a failure to trade into that wick, so that becomes the entry. And then I accumulated more inside of the third drive and it's got a nice run high. But as you can see, we are in these squeeze conditions where we trap traders below the lows. We also get this failure to retest the 500 level, which is once again bullish. And if you look at this, when we do take out this low, it has a failure to break structure. Like it just pierces it and then rejects. No clean break of the structure. So you're going to have a lot of traders who were looking to take profit down here, who were not given the opportunity to. And if you zoom out, you start seeing, okay, well, where is their stop loss? And it starts, you can eye up all these smooth highs. That one stands out because it's got smooth highs, and then there's an impulse high above it. It goes straight there. This was a trade I was in last night, and I gave back a significant portion of the daily's profits here. And the reason being is because I was very bullish. I recognized that this was a beautiful setup for a squeeze. We've got a mega liquidity gap, as I say. Time at the bottom, I was getting long in this area, a nice oh shit moment, as I call them. And just barely breaks the low there and gets this nice reaction out. So I was getting very long through this range. I was getting very long up here, but then just had no follow through. We were hitting these key points of interest, such as that short-term impulse high. And I figured, okay, well, I should put my stop loss below the 5-minute order block, which is right there. Price takes me out, and I'm like, oh shit, okay, it took me out. But then I'm looking down in this area, I'm thinking, okay, well, maybe it's just going to come down to this low and then reacts back out because I think this should be a breakaway gap. This as a breakaway gap being this swing low right here, because this from this low to this high, this is a balanced range, so there's no need for price to come back below that low. So I was like, okay, I'll buy here, put my stop loss down here. It gets a nice reaction. I'm like, oh, sick. And then it has this big rally. When I see that, I'm like, okay, this is doing exactly what I thought it should. It's going to have a nice squeeze into this high. We're on the right side of the V. It should stay really, really strong. And mind you, this is now 5:30 a.m. I'm usually not trading at this time. And I think time of day could have actually been a factor here where it threw me off, but we got this nice pump. I'm like, okay, this is looking really good. We even have a failure to trade into the midpoint of this wick, reacting from the exact point it should. And so I actually bought all the way up here. I then added in this area. And then as it started making these large, significant down closing candles, I realized, okay, I've basically got this completely wrong. I've just screwed it up. I'd already trailed my stops to here. I get stopped out, reacts. Once it reacted, I recognized, oh, we actually had another manipulation closure, which once again, this is a original consolidation signature, which means that a lot of the time it's going to send price away from it before coming back down. So I actually bought it again on my challenge account, but I put my stop loss right here and went to bed, and you can see what happens with that. But that did result in a beautiful squeeze, and that is exactly what I was looking for. It just happened a lot later in the day, and I just got caught up inside of this range. On that note, if you remember this point right here, I'll give you one more example of that. Now, if I zoom into here, I actually took a loss on this as well. But initially, you can see right here, just after the open on Sunday, we have a manipulation closure on the 1 minute time frame. I was expecting us to be bearish and take out this low. So as we started rallying higher, I was like, okay, well, I'm going to trade this market maker sell model. Original consolidation, shift, looking for first stage, second stage, spot and reversal, and then sell off. But when we were on the left side of the curve, get rid of that for now. When we were on the left side, I actually ended up just mistiming it. So I thought, okay, well, we've had a rally, had first stage, looking at the 15-second chart as well. Okay, this is probably second stage there. And then I thought, okay, well, that kind of has to be the reversal, otherwise it's going to take up this high. So I dragged my stop from up here down to here. I'd initially got in on this trade as well, thinking that okay, I'll sell some here. So I sold some at this swing high with a stop loss at this high, and I thought, okay, and then I'll only scale in once it's reversed and I've actually got some clear structure in the oh shit moment. But what happens is it just keeps on going sideways, and now I'm thinking, okay, I'm probably wrong actually. This is not looking good. It's rejecting these lows, looking strong into these highs. Like, I don't know. Okay. Then eventually I'm like, okay, I just screwed it up. I hit max daily loss on my top step accounts in this area, and I was just about messed up, and then it sells off without me. And yeah, impulse origin, the oh shit moment impulse origin right there as well. Realizing that that would have been a nice model, but the reason I point this out is because we have the same signature that became a original consolidation. We have a clear first stage, second stage a little bit less clear. It did play out, however, and then you see how this reverses. It doesn't look like a very clean break lower and lower sell, like it's kind of consolidating. That is because this aligns, once again, if we remember, we have the manipulation closure. The Sunday open, a lot of the time, or at least the daily candle open, a lot of the time represents an original consolidation. That just happens to also give this other signature of relative equal highs, also a manipulation closure through the long wick. So if this is a original consolidation, you can actually expect a Genesis type of reversal, which you have two types of reversal. You have a V-shapes, which is the more SMR kind of thing, such as we see down here or over here. And then you have the original consolidation, the Genesis type, which is like what you see here and also up here, where price is actually planning to return to this area. So it's actually a bit more muddy before hitting low. And you see that once again, just to bring this all back to this trade over here, you see that over here as well, where this became the original consolidation. We then took it out and then traded high. But if this is the original consolidation, this is also a reversal. We traded lower and we reversed. But when we reversed, it wasn't just a clean shot straight back up. It kind of sat down there, consolidated, and then hit high. But yeah, there's quite a few things I was just going over, but I just had to get some stuff out of my head because, as you can see, when my trade idea was to buy right here, so buy right here at 479.5, and it comes down to 483.03. It's a bit of FOMO. Well, not FOMO, I just was a bit disappointed to miss out on that. I was also watching this range in here. I was very aware that, okay, if this is the squeeze, and I think it is, I need to be very aggressive with getting in. But I just wasn't aggressive enough. And if we zoom out to the 15-second or zoom in a bit, we can look at what this area looks like. But represents the midpoint of the range. What I want to see is I want to see us get above it and then hold above that level. We come lower, once again, we're failing to take out lows and then we're pushing back up. So that straight away is a very bullish sign. But I was hoping we'd at least come a bit lower to create some more narrative because there isn't very much data right here to go off. And it would have really just been guessing. And I can't exactly just go, oh, I'm just going to buy here and I'm going to put my stop, I guess, here. I didn't really want to do that. Like, sure, I could have. But I didn't really want to. And I was hoping to get in on the right side of the V, which a lot of the time I am quite good at. I'm quite good at waiting for, like, up here, I would have been able to do it possibly. But just waiting for things that would happen if you were in a squeeze. And then just finding, yeah, areas to get in. But I'll have to study this a bit deeper and just find how I could have traded it a bit better as well. And yeah, I think that this is the low of month. Well, at least on silver, it does look like a very solid low, but we have just had quite a movement. So You have to see exactly what happens, do some more analysis. But yeah, what a beautiful move. As you can see, silver still has a lot of smooth highs. I think that it is very easily coming up to this high right here. So 76.07 is kind of my next target. But ultimately, I think we are actually bullish. And partly I say that because if you look on the daily time frame, we just took out a extremely significant sell side pull at a discount. Well, everyone was given plenty of time to go short. So everyone thought, okay, it's bearish. They're given heaps of time to go short, and the shorts have just been proved right. When the shorts have been proved right, and then you suddenly have the reality flip in an aggressive fashion like this can result in some of the most epic squeezes you can get. So really looking to see this have a nice squeeze back up. We took out major sell size where everyone who was buying because of the war, they all got taken out and liquidated. Now you're going to have people having FOMO. The only thing that kind of makes me hesitate a bit, just the fact that gold did not return into a discount of the range yet. But I think in the meantime, for the most part, bullishness is the way to go. And the fact that it is the first of the month, like tomorrow, that suggests that it could actually have a very aggressive start to the month. Because a lot of the time, these major reversals do happen at the start of the new month. Really long wick, close above the midpoint, sells off, and now beginning to push back up. So I have to see how that goes. I might as well bring up my top step account real quick just to show it. Kind of unfortunate because brand new funded accounts and I'm down 1.4k. You can see max daily loss for today. And you can see I've also got a follower account, which I've just been doing the exact same on, which is a challenge account. But yeah, just trade too much. I'll go through these real quick as well. This is the first day, and you can see straight into deep drawdown. Slightly in the green at one point. Second day, very volatile as well. We're up, down, and then up again. And then on this day, a decent win straight away. So up 350 bucks. And then, yeah, straight down and just went sideways. And then another two max losses right here. So it just has not been going that well. And a lot of it has been literally because I've been trying to force trades that weren't really the big picture trade. And by that, I mean like today, the trades that I took were on, where are we? Okay, on gold. So I was initially bullish on gold, but then I recognized that we were rejecting from these highs. So, okay, this is actually a short. I got short, decided that, okay, this is actually, yeah, I'll just leave it. It then has this beautiful sell-off and sells off into the lows. I then recognize, okay, well, it's clearly coming for the original consolidation. So I thought, well, I'll wait for it to rally up towards this high, and then I'll jump in short up here. Got in short, it ends up squeezing higher, and then we sell off from this high. And for some reason, I decided that we wouldn't take out this high, even though I had no reason to believe that. And I just got short here and then basically finished off my accounts for the day, max daily loss, just shorting right here before 2000. Something else I will mention real quick. So if you remember, I was talking about the three drive failure model and how a lot of the time that will have a failure swing and then we will respect it afterwards. Now, if you look over here, I've got a clear 1, 2, 3 drives. We draw out that third drive. Does it hold? No, it doesn't. We spike below it and we reverse back up. Usually with the three drive failure, you'd want to see it actually, now hold this range and continue low. What happens here is actually fail, like the three drive failure, then fails again and it rallies up. I've seen this happen before, and the exact same thing happened last time where we had a three drive failure that failed, We then went to the other extreme of the range and took out the other extreme, and then we reversed again and took out the extreme again. So it kind of gyrated just like this. So 3 drive failure, and then fails again, takes out the high, takes out the low, and then expands high. I think this could be very key for detecting reversals, because I wonder where it was. It was last week, I'm pretty sure. Might have been there, maybe on silver. No, it's here. Here we go. So multiple times we have, if I draw them out real quick, we have a 1, 2, 3 drives up here. What happens is that 3 drives fails and we get above it, but then it doesn't hold above it and it just sells off again. So like, okay, well that's weird because, the 3 drive failed, but then it failed again. We then have the exact same thing down on the lows. We have a very obvious 1, 2, 3 drive. Now 3 drives usually are very powerful as a reversal, but 3 drives, what happens? Well, it comes straight below it. It doesn't even come into it and vice versa, it just comes straight below it and it fails. So, okay, well, cool. Well, this range should now hold. It doesn't, it fails. And then it comes back up to the highs again. So after failing this, both times it went to make a new extreme of the range, and then it has a continuation lower before eventually reversing back up. Why that is significant is because if we look at the times that it actually does work, and we have a pretty clean example down here, we have a very obvious 3 drives. So 1, 2, 3. We draw out this most recent 3rd drive. What happens in this particular instance is we initially trade into it, and then it has a failure swing and it trades low. So at this point, it looks like, oh wow, this 3 drive actually held and is setting price lower. So now when it fails, you can actually accumulate in this range and it sends price higher. We have the exact same thing happening right here. If we go on to the 15-second time frame, we have a fractal of this, where if we zoom in, we're reaching the midpoint of the range and we have once again a 1, 2, 3 drives. Pretty obvious 1, 2, 3 drives, reverses, consolidates, rallies up, but then has a failure swing and it sends price lower. Price doesn't break this 1-minute low. It only just comes below this short-term impulse low, just taps it lightly and then starts squeezing back up. You could then, let's say, be buying inside of this 3rd drive on the way up and get this beautiful rally. That is the same pattern as what happens today as well. And so I'm beginning to recognize when they work and when they fail. But if we run over to here, you can see I've already done a markup on it. But this looks exactly like that other example I just showed you. A very obvious 1, 2, 3 drives, then has a failure swing and trades low. It fails to break this low. It does take the most deep discount and turn range, starts to rally higher. That's why I was actually able to catch this trade, because I recognized it from a recent example. But it's just really significant because the fact we have this 3 drive here, we do not, I mean, you kind of have a failure swing towards it, but it's not so significant. But we don't really have a failure swing that comes all the way into it and then rallies higher. But we do come straight into it and immediately invalidate it, but then instantly reverse back up and then go make a new extreme. Then after making that extreme, it reverses straight back down and then reverses. So I see this as it's a gyration, but also this is a consolidation, because if it was bullish, it would be respecting intermediate term lows. If it was bearish, it'd be respecting intermediate term highs. When you have it sweeping both extremes and disrespecting internal PD arrays and structure, that indicates that it's actually a consolidation. Now, if you look at the phases of price delivery, when we have a consolidation, the next phase is always expansion. What direction is price going in? Well, price is going lower. So if we're consolidating, it means price is going to continue lower. When it does eventually continue lower, that's when you can expect a potential reversal. These kinds of gyrations also happen very near reversal points, and that is a lot of what throws people off guard, because concepts that would usually hold or be you'd expect to hold. They are likely to fail at the extremes of the range as the order flow begins to change. But getting a really nice run up here. And yeah, I haven't tried to find a new entry just yet. I would love to add to this trade because I do think we can still push a lot further. Like, my eyes jump straight to that on gold. On silver, I like that even more, and my eyes jump to here. And if you zoom out and you look at it, like, oh, well, we just got this nice reaction from the daily midpoint. And this looks like a perfectly reasonable place to buy somewhere up around these highs. Like, even at 72 even could be a nice place to add to the position. Looking at the big picture. But I do want to be at least a bit of a sniper because for my account size, like a micro loss is still decent. And if I was to just buy here and put my stop loss down here, I could wipe out a significant percentage of the account for no reason. So I want to be waiting for the right side of the V. And because we're in a squeeze up condition, that is very durable. All you're waiting for is for price to fall down like that. And then once it starts getting this aggressive move back up, you can trust that you can buy anywhere on this right side of the V. And it should not have deep retracements. It should be, something like that. It should be quite aggressive to the upside. Just like you see in here, where we have the squeeze is beginning. And on the right side of the V, it's just very aggressive. Any pullbacks, if you wait for the right side of this 1 minute V and you start buying here, you can trust putting your stop loss at the low. And that applies everywhere as well. So over here as well, maybe I'll zoom out a bit more. Sorry for getting a bit lost. So I'm moving all over the place, but this is a good example here. We have a potential to squeeze higher. And then if we look over here and you say, okay, we're now on the right side of the V, what do I expect? Well, when we take out lows and then we start pushing higher, it doesn't really come back down. Like we come into the range, we reverse back up. And then if you recognize that, okay, I think this is the reversal, you can just jump in, put your stop loss at the most recent low and get a nice push higher. Because in a squeeze up condition, it's not going to let traders who are trapped out of their position, their unprofitable position. But yeah, this will be all for this video. Bit difficult to follow for sure, but still a nice bit of price action to learn from. One last little thing, just as a little bonus, something I've been noticing works really well is when one of a correlated asset has a really obvious rally. Like in here, we have gold, big breakouts, huge breakouts, breaking new highs, big expansions. Then we've got silver. Everyone who sees this, like, oh, damn it, I missed gold. Well, silver's going to follow because silver does what gold does. And then you see silver start stalling out at a premium of the range. That is actually why I took the short here. If you remember from my executions, I had some short entries here that I took off straight away. But because I saw gold of really expanding into the highs, silver not following suit, but giving the illusion that it was likely to, with these long wicks enticing people to buy, and then it dumps low. We had the same thing happening as well last week on silver, multiple times, but the most significant would have been this. This right? I think it was here. Maybe. No. Getting lost. Might have been here actually. Yeah, here we go. So if we zoom in right here, we got gold at the top, silver at the bottom. And I took this short on silver as well. But you see gold just ripping, gold making new highs, new highs, new highs. Throughout this range from this high down to the low, gold continues to rally, but silver is barely following. It's kind of just failing. It then has this long wick, a big displacement high, looking really strong, aggressive drop lower. At the same time, gold's still ripping. So silver just failing to follow suit at a deep premium of the range, and then gives a last bit of hope for traders looking to catch the long. Then this aggressive down closing candle, that's the O-ship moment, and then that sends price lower. A little bonus. So